Good morning, everyone, and thank you for joining us on Morning Markets from the team at True Potential. Today, we'll be reflecting on asset market performance through January and then just turning to the week ahead. Over January, we had a number of points that the market has focused in on, clearly looking at how COVID-19 infection rates have evolved, but also looking at the speed at which vaccinations are being rolled out. And that was very much evident as over the past week or so, we've seen the challenges of this from a European perspective and the issues that has brought to the fore. Other markets, and particularly the UK, are moving ahead very quickly with their vaccine rollout. If we look at it per 100 individuals, the UK is probably about 10.7, 10.8 individuals per 100. So a great start to that rollout within the UK. And that's something that will be very important about thinking about how economic activity returns, particularly that activity associated with the service sector. The other thing that did come to the fore very much in the final week of the month was just what was happening in certain areas of the equity market in the US, and principally around some of those stocks that have large short interest or where investors have sold the stock in anticipation of the price falling, and that coming up against some very significant pressure on the buy side from a group of investors, but also the implications that had for capital raising for some of those hedge funds that were involved in that, some of the platforms as well in terms of the capital that they needed to commit. So that did bring volatility into the market, and particularly the equity market at the end of last week. If we look at just how equity markets performed on Friday, they were probably down 1.8 to 2% over the course of the day. And that just, I suppose, over the course of the week then sort of took away most of the gains that developed markets, Europe, US stocks had seen over the course of the first month. In contrast, Asian markets continue to hold on to their positive performance year to date. Not going to dwell more on that. I think we could talk a long time on some of those market dynamics. The only thing I would add is that this morning and on Friday we saw quite significant moves in the silver price, and it does appear that that's one of the other areas of asset markets that's now being focused on to see how that price can move as more demand comes in. So we'll continue to report back on that and look at that over the coming days. Just looking overnight in Asia, we had PMI data, both the national survey and also the Casson, the private sector survey in China. And both of those continue to show activity levels for manufacturing and services in expansion territory, albeit slowing a little bit of a deceleration month on month. So if we look at that in terms of manufacturing, a bit of a slowdown to 51.3 from 51.9, and also within services from 55.7 to 52.4. I think the key thing to focus in on there, a reading above 50 does continue to indicate an expansion and activity. So continue to see improvement, albeit at a slower pace than we had seen in previous months. Just the other data point out of Asia overnight, and it speaks to South Korea. It's a very open economy and very much involved in global trade, continues to move and to recover really, and emphasising how global trade itself and manufacturing activity has recovered. So we saw exports again come in at about 11% year on year. That's much better than people had been expecting. And also alongside that, we saw the PMI for the manufacturing side improving again month on month. So confidence within the Korean manufacturing sector, which is very much linked to the global economy and global trade. I think then just looking to the week ahead, there's quite a few things to be thinking about. Clearly, we've got that market dynamic that we discussed in the US, but also how it's impacting silver. So we'll continue to focus on that and report back on that over the course of the week. Just looking at some of the data points that we'll get. In the US, we have the January jobs report coming out on Friday. That will be closely watched to see if we have seen any pickup in the labour market in the US following the slowdown that we did see into the year end, particularly in November and then December. So any suggestion that a bit of improvement there in the labour market would be a positive. I think the other thing to think about over the course of the week, we'll have PMI data points for most economies, Europe and also into the US and the UK as well. So we'll report on those to see if that continued dichotomy exists between manufacturing and services. It probably wouldn't be surprising to see manufacturing sentiment come back a little bit, just given the backdrop that we have at this point in time. In the UK, we have the Bank of England monetary policy meeting. No changes are really expected by the market, either to the policy rate or to the quantitative easing programme. I think what we'll be looking for is some commentary around the bank's assessment of the current conditions, but also any indication of the discussions that they've had with the PRA and around the preparedness of the financial sector for negative interest rates, should that be something that they want to use. Now, that mightn't come out in the statement, might come in the press conference, but I'm certain that the minutes, when they do become available later in the month, will be something that people will be looking at for an indication of current thoughts there. So just looking to the day ahead, retail sales number in Germany coming out, and then a number of the purchasing managers indices. I'll leave it there for today. Please do subscribe on our YouTube channel, and I look forward to seeing you again tomorrow. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.